In the first video, we introduced the concept of strength and weakness in individual currencies as displayed on the quantum currency strength indicator, and in particular how these are defined in terms of the regions of overbought and oversold. In this video, we're going to look at several examples to explain how to use the indicator in a very simple way applied to one time frame. And to start, we have an example using the 5-minute time frame. On the left is the indicator and on the right is the chart. Let's start with the indicator itself. If we look at the top in the overbought region, we can see there are two currencies, the euro, which is the orange line, and the dollar, which is the red line, and the pound, which is the yellow line, has just flipped in and flipped out again. Moving to the bottom of the indicator, you can see that the New Zealand dollar, the white line, is diving sharply into this region, just moving into it as this shot was taken, and immediately below is the Japanese yen, the lilac colour, which has just moved away from the region but has been there for some time. Looking at the indicator on this time frame really throws up a couple of possibilities, and the first one you might consider is the chart on the right, which is actually the euro yen. We're looking here at the euro, the orange line, which is deeply overbought at the top of the indicator, and we're matching that up with the Japanese yen, the pinky line at the bottom, the pinky lilac line, which is just moving out of oversold. So what we're looking at here is a potential reversal on the euro yen from its recent bullish trend, and now we're looking for a possible reversal into a bearish trend. So that's what the indicator is telling us in this time frame. Now the second one that we could consider at this point in terms of a currency pair is the New Zealand dollar. The dollar, the red line we can see up at the top there, is overbought in the overbought region, whilst below at the bottom the New Zealand dollar, the white line, is just touching the oversold and flattening off in that area. So that would be another potential candidate, and this is what we're looking at on the right hand side in the chart here. We have the New Zealand dollar on the 5-minute time frame. So what we will be looking here is for a reversal from the recent bearish phase for that currency pair and a possible reversal higher in the 5-minute time frame. Now let's look at a longer term time, and we've now moved to a 30-minute example. But as you'll see, the principles are exactly the same. Whatever time frame you're looking at, the same principles apply. Once again, if we start with the indicator itself on the left-hand side, here we can see that the red line, the US dollar, is deeply overbought. It's almost up to the top of the indicator itself, and it's been there for some time. Moving to the bottom of the indicator, we can see here that we have two lines, two currencies, which are deeply oversold. We have the blue line, which is the Aussie dollar, and we have the pinky line, the pinky lilac line, which is the Japanese yen. So we could look at two opportunities here. We could have the dollar and the yen, which is the one we have on the chart alongside on the 30-minute. And here we will be looking for a reversal of the bullish trend. So we'll be looking for the dollar to sell and weaken, and we'd be looking for the yen to strengthen. So in other words, we'd be looking for a reversal on the dollar yen to a bearish phase in this time frame. And the other one, of course, that we could look at here is the Aussie dollar. The Aussie is the blue line at the bottom and the red line is the dollar at the top. Let's take a look at that one. And here it is. You can see that the Aussie has been heavily bearish for some time on this time frame and is now, according to the indicator, moving into a deeply oversold sentiment for that currency. So we're looking for a potential reversal, but I must stress what the indicator is telling you. It is guiding you to that chart where you will undertake further analysis. The indicator is your early radar. It's guiding you to those currencies and currency pairs which you match up from the indicator and which you can then do further analysis using whatever methodology you do to trade Forex and whatever indicators you may apply in order to verify that condition and to give you the heads up on the correct time to get into the market. Now let's look at some other examples. And here we've gone right down to the 1-minute chart, an out-and-out scalping opportunity. And once again, we start with the indicator on the left. What do we have here? Once again, we've got the dollar, the red line, which is in the overbought region, and to the downside we have the Aussie dollar, the blue line, which is oversold. So on a 1 minute chart here, if we were scalping this as a forex trader, what we will be looking for now is for a potential reversal from the bearish phase to a bullish period of price action, and we'll be looking for the blue line to start rising and for the red line to start falling. So we would be buying the Aussie dollar on this time frame. But again, I must stress, you will be looking for validation with your other technical indicators, your other methodology to confirm that situation and to choose the correct entry time to get into the market. Now let's finally move to the 1 hour time frame, and again exactly the same principles apply as I've explained on the other time frames. Again, it's a single time frame, it's a 1 hour chart with the indicator on the 1 hour time frame also. And here you really are spoilt for choice. In the overbought area you have really the choice of the dollar, the red line, you have the euro, the orange line, or you've got the British pound, the yellow line. Immediately below, the Swiss franc hasn't quite broken into that region yet, but I must stress that those lines are not there as buy or sell. They are not defining the overbought and oversold regions in any other way other than to guide you as to when those currencies are in those regions. So they are nothing more than guidance, the lines, the 80 and the 20. So there you can see you've got 3 currencies which are deep in that region. That's the dollar, the euro and the British pound. If you move to the bottom of the indicator in the oversold area, again, you're very much spoilt for choice. You've got 3 currencies there. You've got the Japanese yen, once again. That's the lilac line, the pinky lilac line. You've got the Aussie dollar, the blue line. And finally, you've got the Canadian dollar, which is the purple one, which has actually just broken back up into out of that particular region. But certainly, there's a nice combination of currency pairs there to consider. The one we're looking at on the chart here is the euro Aussie dollar. So the euro is overbought, the Aussie dollar is oversold. So what we will be looking for here is a reversal from bullish to bearish. Another example or another currency pair to consider would be the dollar CAD. And here again we will be looking for a sell on the dollar. The dollar has been bullish and is now potentially turning bearish in this time frame, whilst to the downside the Canadian dollar is turning up. So we will be looking for a sell on the dollar and a buy on the CAD, a short in other words on this particular currency pair. And finally, moving to the pound yen. Here we have the pound, the yellow line at the top, heavily overbought, and to the bottom the Japanese yen, the pinky purple line, right at the bottom of the indicator. And once again, we're looking for a short on this currency. We're looking to sell the pound and to buy the yen. So we're looking at a shorting opportunity and a trend reversal from what has been a bullish phase over the last few hours. And the hour is a great chart to look at for those time frames to give you a flavor of where the currency is in terms of a slightly longer time frame than obviously on the scalping chart. I hope you can see from those examples how to apply the indicator in this very, very simple way. These are very simple examples using a single time frame with a single chart. I'm going to stop there. In the next video, we're going to look at some more simple examples using this approach on longer term time frames, just to show that this can be applied whatever your trading approach to the market, whether you're a scalper, whether you're a swing trader, whether you're a trend trader. The principles that you're seeing here are identical. Hope you've enjoyed the video, and I hope you can join me in the next one. Thanks for watching, and see you again soon, and bye for now.